What's up, guys? What if I told you the three best opportunities in this market right now are not flashy AI names, not the sexy moonshot tech shit. They are not the names everybody's looking at and every grandma is talking about. No, I'm talking about a soap company, a furniture company, and an appliance company. Yeah, I know it sounds boring. Companies that don't even have crazy potential tech shit. No, listen. Sometimes in the stock market, the money is not made where everybody's looking. Sometimes the money is made where nobody wants to look, where the story is boring, where the sentiment is low, and where the expectations are low. But this is exactly the type of stocks we want to buy because these are the stocks that can go up. And ladies and gentlemen, I'm talking about three names today: Bath and Body Works, RH, and Whirlpool. Now, these are not the same stock, not even close. One is cheap, simple, understandable. One is dangerous, very dangerous, but the upside could be huge. And one is straight up a recovery plan. A recovery plan. So, in this video, I want to break down why these three stocks are interesting, why I think the market may be sleeping on them, and why this type of setup is a setup that is looking pretty good. Of course, guys, don't forget to like this video, to subscribe to the channel so you can keep updated, so you can get more stocks and get even richer. And guys, as always, this is not financial advice. This is just my opinion and the facts that I find, and everything is just, you can do whatever you want with it. We're starting with Bath and Body Works. Now, this one, ladies and gentlemen, is the simplest one to understand. This is not complicated business. This is not some company that needs a reinvent the wheel. They sell soap, lotions, candles, and body care, gift items, seasonal products. Very simple, very basic, very easy to understand. And funny enough, that is exactly what makes it that interesting. Because Wall Street a lot of times gets obsessed with complexity. Everybody wants to find their next AI winner. Everybody wants to find their next revolutionary technology. Everybody wants their next stock that sounds super interesting and smart at the dinner table. But sometimes the best setup is just a simple business, real products, strong brand recognition, loyal customers, and low expectations. That's the key here. So Bath and Body Works is not a story stock. It's not some maybe one day company. This is a real company with real business model. People know the brand. People shop here, and the products are relatively low ticket. That matters. That's very important. Because in a shaky economy, what do people cut? They cut their big stuff, the expensive stuff. They might delay their buying fewer furniture. They might delay buying a house. They might delay buying some giant luxury purchase. But are they still going to buy a candle, lotion, body spray, a little gift set around the holidays? Yeah, because this isn't $1,000. You know, it are simple gifts, simple product. That's what makes it so interesting. You've got a simple business, you've got a recognizable brand, you've got products that are not outrageously expensive, and on top of that, the expectations are already low, very low, and I like low expectations. Ladies and gentlemen, I really do. Because when the expectations are low, the company does not have to be perfect. It just has to be better than people are expecting. So just a tiny bit better in the stock, you know, that's where the opportunity is, bro. You're not buying this because you're going to we're not buying this because it's going to be the next Nvidia. No, we're buying this because the valuation is very cheap. The business is understandable, and the market is not asking for much from this company right now. And when the company is not asking for much, that's exactly when the stock is in a buying opportunity. So Bath and Body Works, in my opinion, is the easiest one of all three to understand. Cheap, simple, low expectations, real brand, real products, real cash flow setup. That's why it's interesting. Now, yeah, okay, guys, let's move on to the second stock. This is a completely different one. So RH. RH is dangerous, ladies and gentlemen. This is a dangerous stock. This is not the kind of stock where you go blindly. Oh yeah, this is looking great, something like that. No, this is a stock that's dangerous, but it's a controlled position type of stock, a risk reward stock, a turnaround story. So a stock that can absolutely hurt you if you're not careful. But let me tell you why it's still a good option. RH operates in high-end furniture, premium homes design, and premium lifestyle. Premium everything. And when the economy is rolling, when wealthy consumers are spending, when housing is healthy, a company like RH can absolutely become a monster. But when housing slows down, financing gets tight, people stop moving, and confidence, of course, drops. Like, oh my gosh, the stock is gonna crash, the stock market, everything is fucked up. So that's what we're seeing right now. But here's the thing: the reason RH gets interesting is not because the risk disappears. The risk does not disappear. The balance sheet risk is real. The macro risk is real. The housing risk is real. The downside is real. But if RH stabilizes, if housing improves, if high-end demand comes back, if they simply get back on better footing, this thing can move up, and it can move big. That's what makes it fantastic. Because once a stock gets hit hard enough, once enough fear gets priced in, and once enough people throw in the towel, you could create a situation where the upside gets very, very interesting. If the company simply survives and starts executing again, that's how it will work. That's the RH story. It is not safety, it's not comfort, it's not sleep like a baby at night stock, you don't have to care, everything will be good. No, this is a high risk stock, high reward. So if it works, it will actually work and the upside could be huge. That's why people keep talking about it. That's why it's still on the radar. That's why it's still interesting. So RH is the most explosive name of the three, but also the most dangerous. It's really dangerous. So I'm not 100% sure, but as I explained, you guys can do what you want with it. Okay, guys, now on to the third and final stock. So we're talking about Whirlpool. Whirlpool is kind of in the middle, not as simple and straightforward as the first one, so as Bath and Body Works, and not clearly as crazy as RH. Whirlpool is more of macro play. It's a recovery play. It's a bet on housing eventually thawing out. And that's really the whole thesis. When people move, when people buy homes, when they renovate kitchens, when they upgrade appliances, and when they replace old units, companies like Whirlpool benefit. That's just the reality of housing. So yeah, and what have we had for the last few years? Frozen housing, weak turnover, people staying put, fewer moves and less activity. That's of course not been good for Whirlpool, but here's the key question. Is that sustainable forever? I don't think so. At some people at some point people have to move again. At some point the housing activity will normalize. And at some point replacement cycles they just come back. It has to happen. So this pressure has to ease. And when that happens, Whirlpool is exactly the kind of company that can quietly benefit. Stocks go up when the news has already come. But if we are before this, that's why it becomes interesting. Not because it's exciting. It's not because it's trendy. It's not because people are bragging about it. They are not. It's interesting because it's tied to something real. Real economic activity, real household demand, and real replacement demand. Real estate, housing turnover, that stuff matters. And a lot of times, these kind of recovery names are the ones the market ignores until all of a sudden the numbers start improving and people go, oh yeah, wait a minute, maybe we should have bought this stock, maybe we should have looked at this. Then it's already too late. Then the stocks are up and it's gone. That's how it would look. So when I look at all the three stocks together, what do I see? We see different setups. We see Bath and Body Works, that's cheap, simple, low expectation business. We see RH, which is a dangerous turnaround with the biggest upside if it works. And we see Whirlpool, where the housing and the real estate recovery. So totally different, not totally, but three different companies, three different stories, but one common thread. These are not crowded trades. They are not obvious names everybody's chasing. And in a stock pickers market, ladies and gentlemen, that's what matters. That's the stocks we need to find. Because the market is not dirt cheap. You have to find setups. You have to find asymmetry. You have to find low expectations, misunderstood stories, and recovery potential. That's where opportunity can come from. Now, am I saying these three are winners? No, not at all. No, that's not what I'm saying. But if you look at the information I just gave you and you look at these stocks, you can understand what I mean and you can understand what I'm saying. So Bath and Body Works if you want cleaner, simpler setup. RH works if you want the biggest upside, but you can handle the risk. And Whirlpool if you believe housing and real estate will improve over time. That's the game. That's what will happen. So if you ask me which one looks the most straightforward, of course, Bath and Body. If you ask me which one is the craziest, RH. And the middle one, as I already said, Whirlpool. So guys, that's why I think these three names are a good opportunity. Let me know in the comments. You know, I want to talk with you. Which one of these three do you guys think is interesting? Is it interesting? Maybe it's not. Maybe I'm wrong here. But what do you guys think of this? You know. And guys, if you enjoy these kind of videos, we will look through opportunities where the market is sleeping on, and you know, we would look at it together. We speak about it. We comment. Please subscribe. Please subscribe, and then we can talk about it. We can become more smart together. Because you know, there are a lot of names out there. People are not paying attention, and we will find all of them. So guys, see you in the next video.